Hello and welcome to another episode of Business Sense. I'm Ralph Rivas. Today on the show, we have Greg Krasnov, founder and CEO of Tonik. Tonik, of course, is the Philippines' first neobank or digital bank. Banks that do not have physical banks, the typical banks that you see every day. It's the first company to obtain a digital bank license from the Bangko Sentral ng Pilipinas. Greg, thanks so much for joining us on the show. Now, first off, Filipinos are starting to be familiar with digital banks, especially during the pandemic. But but a country with 70% of its population remaining unbanked, it's clear that not everyone's catching up. So please tell our audience what Tonic is all about.
Thanks, Ralph, and thanks for having me on. So Tonik is a digital bank, neobank, which means that we have no physical branches. We deliver our solution purely through the Tonik app. The way that we operate is everything is delivered remotely, including all of our customer service, including all the servicing. The clients are onboarding into the app in under 5 minutes. All it takes is a selfie, a little bit of personal information, and the picture of an ID, and boom, you're in the app. You have a live account. You have a live debit card. You can open, market-leading deposit accounts with high interest rates. You can avail of our lending proposition, and in the future, we'll be broadening the product range to include a full range of financial services that a normal bank would offer, but everything inside the app delivered purely remotely.
Okay, so that's it's just like traditional banks already have their own applications, but it's just that they have physical banks. So and actually, I was able to talk to other executives in the banking sector, and they said that although there's already a push for digital banks, physical banks are not going away because people, Filipinos in particular, want an actual face when they want to talk about investments, savings, and most importantly, complaints. So, Greg, tell us about that. How does Tonic address those demands from customers?
Yeah, I think that's exactly what a traditional incumbent bank would say. Because that's the whole logic on which they build traditional bank branch presence, etc. However, the market reality has moved on from that. Philippines has a very, very young and very digitally native population. The average age is 24 years old. Everybody is glued to their smartphones. Everybody wants to do everything through the phone. And frankly, I haven't yet met a person that wakes up in the morning and goes, "Oh my God, wouldn't it be nice to go to a bank branch and spend like 3 hours there?" So that's just not something that people want to do. It's a pain point. Having to go to a branch is perceived by the customer as a pain point. They will only do that if they have to. There are a couple of issues that you touched on. One is trust, and the other one is servicing. So how do we build the trust for people to actually they know they can trust to keep their money in the cloud, as it were? First of all, we have world-class infrastructure in terms of digital security. We're using world-class vendors on app security, on all of our cyber protections, etc. And on this, we go above and beyond anything that's been done in the Philippines before. We're certified to global standard on that digital security, and we're working very closely with MasterCard and our other vendors on making sure that that's all completely bulletproof. So the level of trust that you can have from that is very high. And underlying that, of course, is we're insured by the central bank. So we're a bank that's licensed by the central bank exactly in the same way that all the big banks in the Philippines are. And that means we're subject to the government insurance on the deposits that people leave with us as a bank. And it's exactly the same way as with traditional banks. So when it comes to trust, can you trust Tonik versus others to keep your money? Yes, you can, and a lot of people do. And in fact, more than 5 billion peso at this point has trusted us with their money already just over 6 months. And it's much, much higher than what we actually expected. We're really on a very vertical curve in terms of the savings that are coming into Tonik at this point.
Okay, so you're close to 5 billion pesos in terms of retail deposits, but and you guys just launched this March. So tell us more about that. Why? What are the main factors that drove that growth?
Yeah, yeah. Thanks for that. We launched in March, and our budget for December of this year was actually about 2.5 billion peso of deposits of savings. Um, we hit that target in June, 3 months into our rollout, and we've done that with very little marketing. So what we see is that the consumer is extremely receptive to the proposition, and when you look at how we've built the proposition, you'll understand better why. Yeah, the way we look at it is we optimize each of our product on what's called the 6 Ps of a marketing mix. So these things include, price, product, place, promotion, etc. So price, of course, is one of those elements. Because we're digital, we don't have the cost of branches. We can offer a much higher interest rate on our deposits, and it's still a lot cheaper for us than for a traditional bank who has to, pay for all those branch people and branch rental costs, etc. So, price is one of those elements. Our promotion, our branding, we did a lot of primary research before we hit the market. And what we found out is that Filipinos are feeling very, very intimidated by the traditional banks, that they're perceived as this, golden marble, big institutions, scary, for an average Filipino. And 70% of the Filipinos don't have bank account, partly for that reason, that they just don't feel comfortable going and talking to that institution because it makes them feel small. We're kind of doing the opposite of that. We actually hashtag neobanking romance. We want the customer to fall in love with us. We call our customers loves and huns. We're a very fun, friendly, on a first name basis type of a relationship. And we see that the customers really respond to that very well. That it's something a bank in the Philippines hasn't done before. Nobody's tried to brand the bank that way and communicate in that way to the customer. So that's our promotion. Place, of course, we're in the app. So as I said before, nobody wakes up and wants to go to a bank branch. People want to do everything in the smartphone, and we're there. And we're there with a capability on product, which is the next one of the P's, that is not really being delivered by the other banks. Our product is not only is the design very fresh and very comfortable, but also the product features. There are some first in-market features to our products that other banks don't do. We're among the first guys in the Philippines to put term deposit on a digital platform. There's only one of the top 10 deposit banks that actually does that. We're the first guys in the Philippines to introduce this concept of a stash. So you can stash your money. So you can create multiple savings accounts called stashes. You can stash your money for these different purposes, and you can connect to them emotionally because you can say, okay, upload a picture of my kids if it's for your kids, or if you're saving for that motorbike, you can upload the picture of motorbike, called the motorbike stash. We also have something we call group stash, which is again a unique product actually anywhere in Southeast Asia, where it's communal savings. It's the concept of Palu wagon in the Philippines that we are the first guys to take it online and enable people to save with their friends or with their relatives for a particular purpose. So all of these elements, they come together to basically make a unique experience for the consumer that he doesn't get at the other banks, and that's where we get our traction.
Wait, you caught my attention on Paluwagan. Uh, how does that work? I mean, that's interesting because I experienced that when I was in college. Like me and my dorm mates would pool money, and that typical. But how does that work for Tonic for digital banks
Yeah,
exactly?
it's very simple, Ralph. So the way it works is, and I would encourage you to download our app. We'll take 3 to 5 minutes to onboard, and you can play around with it. So you create a stash. Once you're onboarded, you create the stash, and then you invite your friends to join the stash. So they also onboard. Again, it takes just a few minutes to do that. And once they've onboarded, they can all contribute to the stash. And then people can get notifications on what's going on with the stash, and you can earn interest on it. So it's not just that you're pooling your money together. but it actually becomes a proper saving where we're making allowing people to earn 4.5% on that stash. And all it takes is you need two other people, and that's the interest rate you're going to get. So your money is going to work even harder towards that communal goal. Yeah, and I would encourage you to try it out.
Yeah. Also, you mentioned about interest rates. Another issue here is that Filipinos are, getting really disappointed with traditional banks because of, the real interest rates are actually in the negative because interest rates have been greatly reduced by the Bangko Sentral ng Pilipinas to support the economy. Like, they want people to spend and, they want banks to lend. But at the same time, traditional banks are quite hesitant because of the pandemic. Um, how are you able to keep your interest rates up despite this environment?
Well, Ralph, I think there's a couple of things that are problematic with the way the retail banking business works today in the Philippines. Okay, and there are a couple of ways in which I don't think it's fair to the Filipinos, and something we're trying to change. Yeah. So one way is what you say: it's the deposit interest rates. So the deposit interest rates, the effective ones after inflation, are actually deeply negative. So Filipinos are paying their banks for keeping their money, and there's 300 billion US dollars of these deposits in the banking system, where Filipinos are paying the banks to keep that. Now, I think that's unfair, and I think people should be making money on their money, not losing money on their money because of the inflation that's eating into that earnings. And then that's why we're offering a higher interest rate. Now, in terms of how can you afford to offer a higher interest rate, you need to be able to deploy it into profitable lending and make sure that that lending covers your cost of deposits, right? And also, you need to make sure that your cost structure on attracting those deposits is very low. So the second one is the fact that we're digital. It costs us a lot less money to bring the deposits in and then to service these deposits than for a traditional bank. So that incremental cost saving, we can pass a lot of it to the consumer, right? And then the second one, the thing that I'm saying is also unfair about the Filipino banking system. Filipino banks lending to consumers is only around 10% of the total banking assets. Now, in most economies, the number would be double, triple, quadruple that and more. Yeah, where the retail lending, in some economies, it's the bulk of the bank business, right? Now, so what's happening is the banks are taking deposits from the consumer, but then they're not passing it on as lending to the consumer. And that's part of the problem, because when they lend to the corporates and they lend at very, very low rates, maybe they have very low risk, which is the way that it happens now, because they have buildings and inventories, et cetera, as security against their loans. But the margin at which they lend to those corporates is very, very low. And as a result, they cannot even afford to offer a higher interest rate to the consumer on the deposit. So we think the market needs to move to where it's more balanced between deposits on consumer and loans to consumer. And that also will create a situation where there's more profitability on the loans, because consumer lending, of course, it's riskier, but it's also a higher interest rate product than single digit interest rate that the corporates are borrowing. So that's the thing that we're trying to change. And by using that consumer lending as our main asset class, we're also able to compete more effectively on the deposit interest rate.
Okay, so I guess you trust the Filipinos a lot, but I'm also curious how you guys are shielding yourselves from delinquent payers. There's those that just borrow and then just disappear out of thin air. You can't contact them anymore, and that's something that's very that's a concern, not just by banks, but by even by informal lenders in the Philippine financial system. So how are you guys shielding yourselves from those types of concerns?
Yeah, look, Philippines is among the least penetrated markets anywhere in Asia on consumer lending. Uh, Filipinos borrow. A lot of, like, more than 50% of Filipinos have borrowed in the last year or two, but only 4% of those borrow from banks. Actually, 60% of them have borrowed from each other. They borrow from friends and family. So Does that mean that Filipinos fundamentally untrustworthy? And obviously that borrowing is happening, and people are trusting each other even without having formal credit policy mechanisms. So what I think is happening, and looking at the way that the traditional banks are assessing risk, they're approaching this in a very, very traditional way. They say, okay, you need to have a credit history in order for us to trust you. Guess what? 70% of people don't have bank accounts to begin with, and of course they don't have credit history. And in fact, of all the people in the Philippines, only a couple of percentage points actually have a credit record. So the banks are not tapping the absolute bulk of the market, and they're not equipped to assess the credit risk of these consumers in a statistical, digitally sophisticated way. Now, in the last couple of decades, consumer lending risk management has evolved to a point where it's a very, very sophisticated quantitative science using a lot of machine learning and predictive analytics and artificial intelligence to train your scorecards, as what they call them, and to use a lot of data that enables you to predict really well who will be a good borrower and who will be a bad borrower. But you need to know how to do that, and you need to know how to create those scorecards, how to use that machine learning, and also how to get the digital footprint data. So, for example, we're using the customer's digital footprint in the smartphone. We're working with a vendor called Credilab, which is a Singapore company that's market leader in the region on this. The digital footprint that the consumer leaves in his smartphone tells you a lot about whether he's a good credit risk or not. Another thing we're using is telecom data. We're connected through two vendors. We're connected to two of the largest telcos in the Philippines. So the consumer allows us to use that data for their credit scoring, and it's very, very predictive. So there are mechanisms in modern consumer lending that can be used, but unfortunately, the traditional banks are not really building that know-how so far to aggressively use those methods for credit assessment. So that's how basically we determine who is a good customer, who is a bad customer, and we're training our systems right now. We started our consumer lending last month, and we're now starting to ramp it up. So we're now starting to gather the data on which we'll be training the systems. And that's how it's going to work.
Okay, so different set of data points that are not used by typical financial institutions and traditional banks. But I'm also curious about the risk. I mean, I still cannot let go of the risks involved. I mean, you use different data points. So can you elaborate more on these data points that you guys are using to determine the credit worthiness of a person? And do you have a number, for instance, of the likelihood of a person being approved by Tonik and not being approved by a traditional bank?
Yeah. So Ralph, in terms of the types of data that we're using, as I said, we're using application data. So what the customer tells us, his demographics, so-called. Yeah. So we have something called the demographics scorecard. We're also using the data in the smartphone. When the customer onboards, he gives us permission to use his smartphone system data for credit assessment. And there's about 50,000 data points that are available to us from that. And a lot of that is extremely predictive. Average Gini coefficient of a smartphone-based scorecard from Credilab is in the mid-30s. That's very high predictiveness, standalone, without the other ones. Telco data, as I said, we're plugged into the telco data, and we get a telco scorecard based on how the customer has behaved as a telecom customer. And that's also very predictive, typically, 30 plus Gini coefficient. So when you combine these, you actually get quite strong predictiveness. In terms of the acceptance level, then it really differs based on the product line that we have, the type of customer, the profile of the customer. Of course, you're not going to approve 100% of your customers. You typically approve, anywhere between, 20 and 50% of the customers. But for the customers that come to us and the customers we source, we actually actively source the types of customers that banks don't go after. Because banks don't know how to deal with this, and banks would not consider them trustworthy because they don't have a bank account, they don't have a credit history, and therefore they're below the radar. And a bank says, okay, it's a C customer or D customer. We don't want to deal with that. So the probability of a customer getting approval with us while he doesn't get approval at one of the big banks is quite high.
Okay. Now, another issue there is another. You mentioned earlier that you're getting information from smartphones. Can you elaborate more about that? Because there have been a lot of concerns regarding data privacy. As you know, pretty sure you've heard in the news other financial new lending apps that have essentially became aggressive loan sharks and have shamed people that have failed to pay up. These companies call up friends, relatives, office mates. I mean, that's quite embarrassing,
Yeah.
for a loan of just I don't know, 2,000 pesos. I mean,
Yeah,
so
look,
yeah.
we're a bank, and the company that we're using as a vendor on this, as I said, Credilab. These guys do bank grade credit cards based on fully anonymized data. So effectively, and it's called what they use is called metadata. So they don't go into stuff like we don't sweep your contacts and take all of your contacts, and we don't like read your SMSs or your emails, right? All of that stuff is off limits completely. So yeah, there's been a lot of issues with data privacy on that, especially with lenders that come out of China, because China deals, very differently with data privacy and these types of things. But yeah, so Credilab has actually built, all of this bank grade stuff. They're selling, in the European Union, for example, and where you have the highest data privacy protections anywhere in the world right now. Yeah, what we use is called metadata, and it's fully anonymized metadata. So the things that we would look
Mm.
at, would be typically, for example, things like, okay, which bank apps do you have installed on your phone? Do you have bank apps from other lenders? As an example, right? And there's many other factors like that are actually very predictive of the customer's predilection towards delinquency or repayment.
Mm. Okay, another issue that I want to talk to are expansion plans. So, what are your plans this year, next year, in the next 5 years? Any targets?
Yeah, we're very excited about the scale of the opportunity in the Philippines. The consumer lending market that we're going after, currently the bank consumer loans unsecured book in total is about 10 billion US dollars. And that's tiny compared to where it should be, compared to some other markets just on a per capita basis. Yeah. So we estimate that for Philippines to converge even to Indonesia and Vietnam, I'm not talking Thailand or Malaysia, yeah, just Indonesia and Vietnam convergence would indicate that Philippines will go 4 to 5 times larger in that asset class to 40 to 50 billion dollars US, right? And if we're talking about Thailand or China per capita or even Malaysia per capita, then we're talking about $100 billion asset class. So it's a huge, huge market, and therefore we're very, very excited about the potential there to service the Filipinos that are currently being underserved by the banks and unlent to. So for this year, our big priority was to get to the market with our deposit proposition in March and with our loan proposition in Q4. So the deposit proposition we launched, we're killing it. The customers seem to really like what we have. We're outperforming our expectations there massively. And on the lending side, we launched our lending products in the last month. We launched the quick loan. Just last week, we started piloting our buy now, pay later product. We have a few other lending products that will be rolled out over the next few months. And this will take that raw material of deposits and put that to hard work to make the lives of the Filipinos better. In terms of where we're going for the next few years, I think the market opportunity is of the scale that enables me to hope that we can build a top 10 bank in this country, and maybe even better than that. And certainly one of the leaders in terms of profitability, because our cost structure is very streamlined, being purely digital. So what we've seen is banks that operate on the business model that we're building, they become very, very profitable and can really outperform the banking sector at large. And that means
Mm.
also from the shareholder standpoint, we would hope to become one of the most valuable banks in the country. And we'd be looking at international expansion, I think, in the next year or so. Once our position in the Philippines is secure, we'll be starting to look at potential regional expansion.
One of the top 10 banks. That's a lot of capital involved. What about an IPO?
It's an option. I think over time it's certainly an option. We're looking at that. It's not something we're going to do in the next couple of months. We're now in the process of closing a Series B round. We've raised, I think, around $45 million so far in the previous rounds. This round is going to be quite large. We're kind of finalizing that before the end of this year. And this is going to give us a lot of firepower to really go aggressively after client acquisition and building our loan book in the next year and 2 years. So I think, in terms of financing, we're still doing really well in the private markets.
Mm.
But of course, over time, we will be looking at IPO as an option because that's a great long-term access to capital. And that's also a great message to our customers that, we're a very large and very trustworthy institution. So over time, a lot of the banks tend to get listed. So we'll see.
Mm.
Yeah, but that's probably long-term in the cards as well.
Yeah, yeah. Looking forward to that announcement in the coming, maybe I don't know, coming years perhaps. But I want to go back to some of your products. You just launched the quick loans. I'm sure our audience is curious. What's the minimum or what's the maximum that they can borrow, and the number of years that they can spread that out. Any other financial products that you can give a tease? Uh, Tell us what we should expect in the
Sure.
by the end of the year and maybe next year.
Yeah. The quick loan, please come and give us a try. We're in a different space than most of the banks. As I said, the banks typically will not start looking at lending to you unless you're looking at kind of $1,000 plus, sort of 50,000 peso and over. Whereas our starting ticket is much lower. We're looking at loans of a few $100s. Our average ticket size for the quick loan is about $500 or about 2,500 peso. So that's the type of space we're going after. And a lot of people have needs of funds around that have to do with improving their day-to-day environment. So buying consumer electronics, durables, laptops, furniture, a new fridge, a new TV, a washing machine. So those are the types of things that a lot of our consumers want, and that's why we've also started piloting a buy now, pay later product that specifically targets the customer acquisition of these consumer durables. So we're basically looking to make the lives of the Filipinos better and to enable them to trade their excess earnings today for having a better life and kind of living with those things and living with that improved lifestyle already today and not waiting to save up until a year or two. The term that we'll lend to is up to 2 years on these products. And we're now preparing for a rollout of these products and starting the rollout into retail partnerships as well. So you'll be seeing a lot more of Tonik in the coming months, I think, on the shelves with our ads there and being able to kind of QR code into our app and quickly get our loan from right when you're standing in the store. In terms of the speed, we're by far the market leader in how we approve the loans. And in fact, one of the biggest complaints that we have from the customers right now in the last month is the guys that get unapproved, the ones that are rejected for a loan. They say, I was rejected too fast. You didn't even look at me. So and then we have to explain and communicate with the customer that, guys, it doesn't mean we haven't looked at you. It means we've looked at all the data, but we look at all the data super fast because there are no humans. It's all algorithmic. It is mathematical formulae that are driving this. And so that's how we're able to make these decisions very, very fast. So we're not going to waste your time. The application process takes 5 minutes to onboard into the app and get a current account, and then another 5 to 10 minutes to fill out the application form for a loan. And then the decision is basically instant. So you'll know very quickly, and you'll spend minimum time to actually process your loan.
So I'm curious, what did you guys learn from about a typical Filipino needing money in the since you've launched this March?
Yeah. Look, I've been a consumer lender for about 15 years now, and I've built and sold a bank before in emerging Europe. So in a very similar market at that time that the Philippines is today. So where most people don't have bank accounts, and most people have never never borrowed from a bank. So and what we've seen is the mainstay of the consumer demand for borrowing is driven by those day-to-day consumer durables. It's wanting that fridge, that washing machine, that TV, maybe that laptop or that PC. So those are the main drivers of the demand for loan in the initial stages of the market development. And so that's really where we're targeting. Some of it will be like travel. Sometimes it's maybe like a wedding or some education, but like the bulk of it is consumer durables. So that's a market we're targeting. Yes, in terms of the number of Filipinos that want to borrow, I don't know, 500 peso, there's a lot of Filipinos that want to borrow 500 peso for, I don't know, a week or 2 weeks, for the payday period. But basically, if you look at the overall size of the lending market, because these loans are so micro and so small ticket, that doesn't actually drive the big asset number in total, right? So that segment, we will also have a product for that segment. We're planning a product for that segment next year. It will be basically targeting that micro segment, but it will be probably linked to the payroll of the consumer. But that's not where we see really the biggest demand in terms of asset size.
Greg, the Christmas season is here. People are really waiting to spend money and, borrow even more because they don't have enough to spend for their friends and family. And next year, many are talking about the so-called revenge spending when the pandemic finally, goes down to within desirable levels. So, how's Tonic taking advantage of that?
Yeah, so Ralph, thank you very much for asking. Actually, we have a couple of super exciting things that we're about to announce. One thing that we just introduced and kind of leading into the Christmas season, we're trying to make the Christmas easier for our clients by introducing this welcome bonus. So anybody that joins Tonik between now and the end of the year will get 60 peso bonus on his or her account as soon as they onboard and make the first cash in. So that's a very exciting thing where we're trying to help our clients and kind of give them a little bit of a Christmas present. And another thing that we're planning to announce in the next few weeks is actually a referral bonus, where we want our clients to earn additional money and also to help them manage their Christmas spending when their friends on board. So our customers will be able to give a referral code to their friends. And when the friend's on board, then both the friend gets a higher welcome bonus and our customer will get that referral bonus. So this is how we're trying to make people, to help people celebrate Christmas better this year. And we really, really hope it helps a lot of Filipinos to have a better Christmas.
Yeah, sounds exciting and interesting, Greg. So, looking forward to more of your plans, and I'm sure we'll see more marketing stuff and advertising from you guys as you expand operations here in the Philippines. And on that note, thanks so much, Greg Krasnov, founder and CEO of Tonik, and I'm Ralph Rivas. Thanks for watching Business Sense.